I'm delighted to welcome our first guest today, Mathieu Chabran, the CEO and co-founder of Tikehau Capital. The company was founded in 2004. Tikehau Capital has impressively expanded over the past 20 years, now boasting 17 offices across Europe, the Middle East, Asia, and North America, with nearly 800 employees. The firm manages assets worth 46 billion euros and operates through 5 main business lines of private debt, real assets, private equity, capital market strategies, and tactical strategies. Mathieu, welcome, and thanks so much for joining me today.
Thank you for having me, Anastasia.
It's great to have you here today, and this year actually marks the 20-year anniversary of Tikehau. So I think we have to hear the story of how it was founded and why, and why did you feel compelled to found a private markets company back then?
So once upon a time, I was 28 years old. My partner was 30. We had started our career, at Merrill Lynch, in the city of London. And we were seeing, this emergence and development of asset managers, mainly coming out of the US, in Europe, tackling the private equity, the real estate, not yet the private credit market the way we understand that, today. Mm-hmm. And we went like, hold on, there might be an opportunity there, for us. And like any entrepreneurs, we started from scratch with, our little savings, from working in the city of London and a lot of friends and family, helping effectively launch the business. So a real entrepreneurial journey, like you have, many here in New York City, but not that many in Europe, I must say. And fast forward today, the journey has been one of entrepreneurship, with ups and downs. The GFC was a massive catalyst, not only for the asset class, but also for us as a platform. What we've been experiencing in the overall interest rates environment over the past 10 years has also been a massive driver. And here we are today. I moved here to New York 6 years ago to lead the North American expansion, and out of Asia, Europe, our domestic market, more recently the Middle East, we want to offer and best serve our clients and investors.
There's obviously a lot of other players in the industry, and I know that there's a secret sauce. There's a certain, approach that you have to investing that's important to you as you build the firm. Let's talk about that.
Well, I think that skin in the game, is the starting point of any entrepreneurial story. And all the more in the financial industry, which at times, is less the case. We've always been of the view, at Tikehau and with Antoine, that we were first and foremost principal. So not only, we remain, the largest, shareholder of the firm, but more importantly, the firm is always one of the largest investors out of the balance sheet, side by side with our LP, with our investors, with our customers. Mm-hmm. And that has made, a fairly differentiating model because it requires, significant asset base, equity base, which we have developed, over time. It requires, the willingness to take risks, but that's, the risk that we underwrite, for our clients. And when you do it well, you've got this very positive flywheel effect where, you compound your balance sheet side by side your clients.
And I'm sure very much appreciated by investors. So let's go back and talk about the global expansion. You started in Europe, and then your next step, I believe, was expanding in Asia. Right. And then now you're coming to North America. You've been here for some time. So tell us how that came about and what you saw in each one of these markets that made it compelling at the time.
You have to be strong in your domestic market, and strong both from an investment and from an investor support. And that's what we did, starting in France, but very quickly across, Western Europe, with this local presence that made and gave us a differentiating access to investment opportunities. And that's why, we took that first to Asia, because the emergence of the asset class was one that Korean investors, Japanese investors, Australian investors have been extremely active in. And we wanted to offer them a differentiating proposal to invest, in Europe, in credit, in real estate, in equity. They moved to North America because we wanted to do the same thing, but also start deploying, some capital and some differentiating strategy. There's no shortage of capital here, and there's no shortage of smart managers. But when you can put this, pretty unique frame where you tell your investors, we're fully aligned with you. We try to come with differentiating strategy. We have a motto, Anastasia, at Tikehau, which is create, don't compete. When we launched our secondary private credit business 4 years ago, we certainly pioneered that. The same way we pioneered direct lending in Europe. Obviously, many American managers had been doing that, in the US. It was emerging in Europe. But, we always try to come up with strategies that gives a hedge to our investors. Same thing on our private equity business. Our growth equity, when we launched energy transition, cybersecurity, those were, very differentiating proposal that today seems, flavor of the month. But at some point, that was very disrupting.
So let's talk a little bit about the global opportunity set as you see it today, and maybe what opportunities that is actually creating. As I look through the macro lens, central banks around the world are certainly shifting towards a rate cutting cycle. That's definitely been a reprieve for public markets. So I'm wondering, how does this trickle down to private markets, and what does this mean in terms of opportunities, private equity versus private credit, real estate versus other real assets, and maybe that does create some geographical preferences as well. Where do you see those opportunities?
Yeah, I believe that the structural opportunity of the private market has developed over the past 10 years in a pretty unique cyclical environment. So this drop in interest rates, this very facilitating monetary policy have driven, the emergence of the asset class. There was some distortion, in the market. Today, at 3, 4, 5% interest rate environment, and regardless of a cut in interest rates, we know that from an investor standpoint, the asset class has become totally structural in their allocation and in their portfolio construction. So today, the opportunity set for us is still very much around credit. It's credit because banks and capital markets have become much more constrained. Not any companies, not any entrepreneurs can access, the public bond markets. The bespoke financing solution that a local entrenched, asset manager can bring to these entrepreneurs and these either sponsor-led or family-owned businesses, are here to last. And from an investor standpoint, this compounding effect is a great opportunity.
You mentioned from the geographical standpoint, you're actually thinking about expanding or are expanding into the Middle East. What do you see there?
The Middle East has been, no surprise here, a growing pool of capital institutionally, and they've been extremely sophisticated in the way they've been allocating, to many strategies, worldwide. So we opened our Abu Dhabi office 2 years ago. We've been in Tel Aviv, Israel. We're expanding into Saudi Arabia as well, because they also want to see our portfolio companies going into their markets. Energy transition is a massive play. So not only, they want to obviously diversify away from the domestic economy, but they want us to bring back some of our portfolio companies to expand, their market share, to bring their technology. And that we've been seeing increasingly over the past 3 years.
You mentioned energy transition. I know decarbonization is a big theme for you. And speaking of creating something, I believe you are one of the leaders in actually bringing decarbonization private equity to the market. When I think about public markets, it feels like some of the ESG strategies or decarbonization strategies have lost a little bit of luster. Even though we had the credit incentives and the policy incentives. So how do you see this energy transition playing out in private markets?
What was a nice to have 6 years ago has become a must have from an investor's allocation standpoint, institutional or private. How many family offices, we're working on are asking us to effectively offer them some solution to, allocate their capital where there's an impact. And I'm talking mainly about climate, okay? All the gas emission, the CO2 emission, all these themes that people have been educated about today. They're like, okay, but what do you do, concretely? What do you do?
Yeah.
Where we're financing and investing with entrepreneurs who have a solution today, to reduce in low carbon mobility, in energy storage, but they need to scale this solution, not to meet some objectives, in 2015, but effectively to scale the solution today.
Right. And what has that experience been like, returns on decarbonization in private markets versus public? Because again, the track record in public markets, I feel like has been a little bit mixed.
Yeah, in the private market, you cannot hide yourself because it's what is the underlying operational growth, right? So the company we've been investing into tend to be 25, 30, 50 million EBITDA, businesses with a solution. And as we are harvesting the portfolio today, those companies have gone to, 90, 100 million EBITDA over the past 3-4 years on real underlying growth. So the play is not a levered play, is not a multiple expansion play, is not a financing play. We're not in the buyout world here. It's effectively investing with these entrepreneurs. They've got a solution. They need to build a factory. They need to buy a competitor, and then they scale, their solution.
Mathieu, my last question to you, speaking of growth, in the next 12 to 18 months, where are you focused? Where are you looking to grow?
So from a strategy standpoint, anything that has, a contractual interest, for as long as there is alignment of interest, that we like, so credit, real estate, infra, that we like. Geographically speaking, we believe that there is a massive opportunity in Europe after the various cycle, that we've experienced. But by the same token, for us, being a relatively new entrant in North America, I can see, what we do in secondary private credit, which is an asset class that is developing, very significantly, very immature market with the potential to grow. So, it's really on few fronts, but as long as you create this compounding effect, for your portfolio and your clients, there is a significant set of opportunity.
Mathieu, thank you very much for this fascinating discussion. I really loved hearing about your thought process about expanding globally and finding opportunities globally. It also is great that you do think across asset classes of private equity, private credit, real estate, and more. So that's been really great. And of course, loved hearing the TKO story. And thanks so much for sharing that. And congratulations to you on 20 years of success and many more to come, I'm sure.
Thank you. And thank you for having me.